credit is going to be so vital now. They're starting looking at things with credit scoring, things like that, in a different light now. With our counseling agency and a lot of counseling agencies, we still haven't received or seen the different changes in the industry because they're known our counseling agency and the history of our counseling agency, and they're still looking at our clients differently than they would look at someone else with credit scoring and things of that nature. But we can see that will be coming to a halt, and that's going to be changing where they're going to be looking for higher credit scores. That's what Mason's going to be covering with you today about the process that the mortgage lender is going to be looking at. Now, National City is just one entity. You can go basically any mortgage company to get your mortgage for the program to purchase your home. What we have to make sure is that, one, that the mortgage company, like National City, understands there will be a second lien against the property and that they're willing to have that second lien against the property. There are some entities out there that don't allow second liens against the properties. So if you have a mortgage company that you want to go through, that's fine. What we try to do is talk to them up front, let them know that you're going through a first-time home buyers program. These are the parameters for the program. Are you willing to work with the program? We don't want you entering into an agreement to sell and they say, well, we can do the deal, do the deal, do the deal. And then you're right, like 2 weeks before settlement, and they're saying, oh, well, we have no idea. And Mason can vouch, we did a couple clients. Mortgage company said, we can do it, we can do it. Mason came in a pinch and we settled on a couple clients, but you don't want that to happen. Again, we don't want that to happen. Again, no your own, because the mortgage company said they could do the deal, but then we were scrambling around and try to get another mortgage company because, again, they came back when it was presented to them up front and then said they couldn't do the deal. Sometimes there's light with the mortgage company. If they're selling it to a investor, the investor won't allow but so much to actually go where they will purchase it. So there's different things, but again, we try to get those things straightened out up front before you, okay? But I'm going to pass it off to Mason. He's going to talk about mortgage finance.
Good morning. Thank you, Larry.
All right. Just introduce yourself.
Yeah, my name is Mason Hudell. I'm with National City Mortgage. I've been working with CCIP in their program at least for 2-3 years. I've been in the finance and real estate business for 20-some years, 23, I guess 25. 1981 I started getting involved with this. I'm going to try and give you today a quick synopsis, what the mortgage company is going to be looking for, what we need to do and try and get you approved for a mortgage, and try and streamline that process a little bit for you. Like Larry said, we have to be very careful. When we're working with the CCIP program, there are certain rules and regulations that they have, their guidelines, and we have to be sure that we meet. The interest rate has to be a certain percentage below a certain benchmark. We're well familiar with the second lien program. We don't have any problems with that. And when you utilize the CCIP, a lot of times what we're able to do, if your realtor is experienced, they'll be able to get you a seller assist most likely in this marketplace. Between the $5,000 you're going to get from CCIP, the $1,000 that you have coming out of pocket that they require, and the seller assist, that's basically all we need to get you into a home. Okay, so you can be into this properties for as little as $1,000. All right, I'm going to talk to you about what I call 3 C's: credit, cash, and collateral. Okay, this is what mortgage companies are going to analyze when you come to us. The most important thing, again, I'm not going to hit on the credit because he did a great job on the credit side of things. The credit is, when they look at the credit, this is your willingness to repay the debt. We're going to analyze your income, your job stability, and things like that, and say, okay, can this person, does the income support the monthly payment that they want to take out with us? Sure. The credit report is what tells us your willingness to repay that debt. Okay? It's equally as important, if not more important. If the credit report reflects that no one's getting, you never paid anybody back in your life yet, mortgage companies can look at that and say, chances are we're not getting paid back either. Okay? If you have credit situations where you've got 2 or 3 good payments on there, you've got a couple old bad things, and these are things we can start to try and work out. Okay? Start getting credit explanation letters. Extremely important. The credit explanation letter can actually change a denied loan into an approved loan, depending on the circumstances that surrounded those late payments or collections or things like that. We've seen it all, so it's nothing, you know what I mean? They're not going to come to us with anything that we haven't seen before, okay? If you have some good stuff that's established now, that's key. You know, the last 2 years, we're going to look at that and say, well, they have 2, 3 credit cards, they've been making these payments on time, they've been paying the rent payment on time, had a couple medical bills or a couple slow pays back in 2005 or 2004, or a couple collection accounts. Okay, what was going on in your life? Was there a loss of a loved one? Was there a loss of income in the household? Was there a medical situation, car accident, something like that? There was a circumstance beyond your control. Okay, you did what you could. Everybody knows you got to pay your food, you got to pay your rent, you got to pay your lights, you got to keep all that stuff on. I'm a big believer, and especially now with that FHA financing. There's been huge changes in the last 12 months on the types of financing that are available out there. Unless you have a credit score of 700 or above, you're going to pay yearly on a conventional loan interest rate. There's huge add-ons now. Your credit score starts getting down below 680, 640, 660. You're going to have huge increases in your interest rate on these conventional mortgages. The biggest problem with working with CCIP is you won't qualify to get your $5,000 if you use a conventional loan. The rate's too high. Larry won't let us do that loan, okay? FHA does not have, at this point, add-ons for credit scores, okay? Federal Housing Administration, basically, they are for the first-time buyer. They're consumer-oriented. They want to protect you as the consumer, okay? Requires very low down payment. All right, now we're going to talk about cash. Next thing is the money. Okay, now you're fortunate because you're smart enough to realize, Larry said the program takes about 8 hours. Figure with drive time, you got 10 hours in, you get $5 grand. That's $500 an hour. It's good pay. Okay, so you're smart enough to show up to make $500 an hour. Cash in this situation shouldn't be a problem if you have the $1,000 that CCIP requires out of your own situation. Mortgage company always likes to see they have extra. 401k plan, you got some extra savings, things like that. What we call compensating factors. If we've got a loan that's right on the edge, and man, it's not going through the automated system, the underwriter's looking at this thing, we're trying to make the deal work. Believe me, we got to lend money to make money. Okay, we're a mortgage company. We don't lend money, we're out of business. So we're trying to make as many loans as we can. What do we have to compensate for this? We've got a 401k plan with $10,000 sitting. Good, here we go. Okay, we got a savings pattern. Minimal increase from your current housing payment to your new housing payments. You're paying $850 in rent and you're only going up to $950 on your mortgage payment. That's a significant compensating factor. If we can prove that you can afford to pay the rent now, chances are that small increase is not going to create a whole lot of extra risk for the mortgage company. All right, so we want to take all this information in. When you do your application or your pre-approval, which I'll get into in a second, I want you to give me as much information as you can. I don't care if it's an extra bank account that's got $200 in it. The fact that you have these savings, extra savings accounts or things like that can be critical in getting the final approval on the loan, okay? The collateral is the house. What are you putting up to get the loan? What are we putting our lien against? We're putting our lien against a piece of property, okay? We're going to send an appraiser out there, an FHA appraiser, who is going to look at this property. He's basically our eyes. He's going to tell us this thing is in good shape, it's not in good shape, it's in a good neighborhood, not in a good neighborhood. Street's got board ups, doesn't have board ups, whatever the reason, or whatever he sees, he's going to report on that appraisal report, and we're going to make our decisions based on that. It's very rare, but you do have some things that are just property rejects. You just cannot lend on. The condition isn't good enough. A lot of board ups on the street, something like that. You know, those are areas that we just cannot lend, or properties that we cannot lend on. All right? So once that all comes back and this all fits together, now we got the credit straightened out a little bit. You've been working on that through the CCIP program. You got your credit explanation letters written. We're going to do what we call underwriting of that loan. Basically, that's going to be your final approval saying, yep, everything's good to go. And Larry isn't kidding. I mean, there's lenders out there. And we pride ourselves on not being that. We don't do any predatory lending. We don't allow any discrimination. We want to make the deals work. But there's lenders out there that will tell you, oh, you don't worry about anything. Everything's good to go. It's unfortunate because that person sitting there doesn't know what they're doing. In other words, they haven't troubleshot that loan when they took it in the door. And 2 weeks before settlement, I'm getting a phone call the deal's going south, what can we do to fix it? 99, we can usually get it straightened out, okay? But it's a lot of work, and everybody's in panic at that point. People are crying on the phone, they're all excited, they're ready to move into the house. 2 weeks before settlement, they're getting told that everything that they were told 2 months ago wasn't true, basically, okay? I can't recommend strongly enough. In this package, you will see there's a form in here. If you want to get a full-blown pre-approval done, we'll do it for you for free. Doesn't cost you nothing. It's going to require that you either meet with me or go online and do an online application. It takes about 15 minutes. It's easy. I click the button, send you the forms back, you sign them, and send them back in. It's not hard at all. You send in W-2s, pay stubs, and bank statements. We're going to require that you have a 2-year residency history somewhere, 2-year job history without any major gaps in between, okay? And we're going to require you to provide us with 2 months worth of your bank statements, okay? That's it, and a credit explanation letter. We'll fully underwrite that loan so that you know up front, yeah, I'm getting this mortgage. Unless something crazy happens, I lose my job, my credit goes downhill incredibly fast, you're going to be able to purchase this home. Because let's face it, if you can't finance it, you can't buy it. It's as simple as that. And that's true for 99% of the people out there. You know, very few people have cash to go out and put out $150, $180, whatever $1,000, go buy these properties cash. Okay? So again, encourage it. Again, it's free. It doesn't cost you a nickel. If for some reason we can't get it approved, at least you know, hey, here's the reason why, and here's what we need to do. Get this cleaned up, cleaned up, cleaned up. Come back and see us in 6 months. Stay on time with everything else. You're on the right track. But sometimes I have to do it. I just cannot get the thing approved. Come on back and see us in 6 months. Get this straightened out, straightened out. The fact that you have the credit counseling certificate also works as a compensating factor for you. Because they know that you've gone to the budgeting class. They know that you've listened to a guy like me. And you've gone through this education process. That takes another layer of risk out of the lending decision process, okay? With FHA, again, it's a 2.25% down payment. They consider the CCIP money that you're getting as part of your own funds, okay? So again, you may only need $1,000 out of your pocket to do it. Very competitive interest rates, and we have to be. With CCIP, again, there's a certain margin we can't be above. It's as simple as that. We can't be above it. You're out of the program. You can't buy the house. It does nobody any good. Okay? Doesn't help you, doesn't help us. I believe you're limited to a single family here with the CCIP, but I'm sorry, question?
What's the difference between the PHFA and
I'm going to go into that.
Okay.
Okay? PHFA is the program that I would prefer to put you all into. It stands for Pennsylvania Housing and Finance Agency, and basically what it is, it's a quasi-governmental agency that's set up that has low-interest mortgages available, okay? They come to big banks like ours and say, hey, will you guys put this money out on the street for us? Sure, no problem. We'll go out and sell this money for you, and they'll pay us a fee for doing that. For example, your straight FHA rate today would be about 6% with no points. The PHFA is 5 3/4 with no points.
So that's like 5.75.
5.75.
85% under what something within that range.
It's 5.75.
Okay.
Yeah. Now, there are times when things get out of whack. The mortgage industry is crazy. There's times when I have had better interest rates on a regular FHA loan than PHFA. I'm pulling you out of that program in a heartbeat and putting you with a regular FHA. There's no need to go through the extra rigmarole and paperwork that's involved with it unless we're getting a better interest rate out of the deal.
And you combine the two?
It is, yeah.
Okay.
You do an FHA loan and you just put it through the PHFA program.
Okay.
You can use conventional FHA or VA finance with that program. Any vets in the room? Okay. VA would be another option, would be the best option for you in that case, okay? PHFA also, if you fit, there's two separate programs they have called Keystone Home Loan and the Keystone Plus, okay? The Plus has a real nice feature because if we're able to get you into the Plus program, it will give you up to another $2,000 grant. Now you got 5 coming from CCIP, potential $2,000 from the Keystone Plus program. And again, with your own money, you're probably not going to need a nickel over that $1,000 out of your pocket, okay? I can never guarantee anybody what exactly they're going to get on that grant because they do what's called a needs base. You kind of analyze your bank statement, see how much you need to buy that house. And if people get 800, I just have a lady going to settlement Monday actually. She's getting a full 2,000. Some people get 1,500. But it's at least something we can put you into to see if you need it. Now, if you don't need it, let's just say interest rates are better on the other side of the fence, regular FHA, we're going to go that way instead. Because it's less paperwork, less aggravation for you and me. I mean, I'll be honest with you. We're going to do it the easiest way we can. Okay? Some of the other things,
One
well,
other question.
yeah.
Would you need to get into the plus program?
As long as they have certain income limits. I don't know them off the top of my head. For a single, I think it's somewhere around $42,000. And then it increases as your family size increases, 2 or more members, 3 or more members. Same thing for the regular Keystone program, has income limits that you have to be under to fit into the program. And those increases the family, and they're slightly higher. The regular Keystone program does not offer the $2,000 grant though, okay? It used to be that the Keystone Plus, you had to have a family unit, so it had to be mother, child, father, child, some sort of...
I think the Keystone Plus, I mean, I was talking about, they told me it was like 54 or something like that.
It might be for more than one person.
Okay.
Yeah.
How do you get in touch with? Do you have a number or something?
Yeah, my card's in here. Right on the back thing. So if you guys have any questions, next week, give me a call. If you have access to the internet, I can get you hooked up onto the website. You can go on there yourself and kind of read about the program. If not, just give me a call. Same thing with the pre-approval. Give me a call. We can do it over the phone. Like I said, do it by internet. A bunch of different ways we can try and get you set up to get these pre-approvals done. Again, National City is committed to first-time buyers, low to moderate income lending. Okay, it's a big part of our business. We want you guys to finance to us, if at all possible. Okay. I said we'll do everything we can to try and get you approved for the mortgage. But you got to work with us. It's the same thing. You got to give me. It's like pulling teeth sometimes. I'm asking for 2 pay stubs, 2 months worth of bank statements, and 2 W-2s. It's not rocket science. Okay. But it's like pulling teeth to get stuff out of people sometimes. It'll be 2 weeks before settlement. I'm still waiting for a bank statement. 90% of the time, the reason I'm waiting for it is because they don't want me to see it. There's something wrong in there. There's a large deposit went in. There's some bounced checks that are going through that they don't want the bank to see. It doesn't matter. We got to see it anyway. Okay? If you got large deposits, it's one of the biggest things that mess people up. They're going to buy a house. Grandmom's giving them $1,000. Uncle Joe's giving them another $1,000. We look at the bank statement, it had $263 in the last one, now it's got $4,500 in it. Where'd it come from? The bank's going to ask where it came from. Okay. The large deposit will mess you up. Because now we have to treat each one of those deposits as if it was a gift. So we have to track where it came from. That means getting your uncle's bank statement, showing it coming out of his account, showing it coming into your account. It creates a nightmare of paperwork. Okay? If you're going to get a gift, it's perfectly legitimate. Nothing wrong with it. You just got to be prepared to follow up with the paperwork. Oh, I'm sorry.
1 year you said only 2.25% down.